Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about Axis Securities top stock picks for 2019. Please watch this video to know more. Now the first stock on the list is IndusInd Bank Limited, which is available at Rs 1548.20 and the face value for it is 10. The target price here has been set at Rs 1876.00. The symbol for it is INDUS INDBK. Now IndusInd Bank has an ideal mix of loan book with niche in vehicle finance and corporate banking inclined towards working capital finance. Strong net interest margins, higher other income, and stable asset quality have resulted in consistent operating performance. Axis Securities expects the bank, with its high share of CASA, which is at 44%, to be amongst the key beneficiaries of the highest spreads and softening yields in the near term. Key monitorables are the Bharat Financial merger, IL&FS exposure, and changes in top management. Now looking at the one-year chart, the company has not really done much and is closing the year below what it started it. The company is a large cap with a market capitalization of 93,214.42 crores. The EPS of 63.87 translates into a price to earnings ratio of 24.24 when compared with the industry PE of 33.60. The price to book ratio of 3.97 is also slightly on the higher side for a bank. The debt to equity here is 1.4124, whereas the return on equity for this bank is 0.1614. The dividend yield stands at 0.48, whereas the promoter holding is 16.74%. Now the second stock on the list is Voltas Limited, which is available at Rs 536.15 and the face value for it is 1. The target price here has been set at Rs 672.00. The symbol for it is VOLTAS. Now Voltas Limited is an air conditioning and engineering company engaged in room air conditioners, contract revenue, commercial refrigeration products and sale of services. Now, Axis Securities believes Voltas is the best bet in the consumer durable space from 3 to 5 years given its strong franchise, focus on plugging the gaps in the product suite, improving order book visibility, and the cautious approach deriving benefits in the form of improving margins. Now, looking at the one-year chart, the company has been an underperformer and not much wealth has been created here. The company is a mid-cap with a market capitalization of 17,740.39 crores. The EPS of 15.83 translates into a price to earnings ratio of 33.87, which is much more higher when compared with the industry PE of 23.05. The price to book ratio of 5.05 is also a bit on the higher side. The company's debt to equity is a decent number and stands at 0.1324, whereas the return on equity is 0.1560. Voltas has a dividend yield of 0.75%, whereas the promoter holding is below average and stands at 30.31%. Now the third stock on the list is Starlite Technologies Limited, which is available at Rs 286.10 and the face value for it is 2. The target price here has been set at Rs 410. The symbol for it is STRTECH. Now Starlite Technologies Limited is a global technology company engaged in designing, building and managing smarter digital networks. Now Starlite Technologies enjoys around 10% of the global market share and around 40% of the domestic market share. It has an order book of upwards of Rs 6,000 crores, giving a visibility of around 1.5 years. Key triggers for company's growth includes 4G network expansion and 5G deployment around the world and transformation of the company from supplier of OF and OFC to providing data network solutions. Now, as is evident from the one-year chart, the company has not really done much and has been an underperformer throughout the entire year. The company has a market capitalization of 11,513.15 crores, which means that the company is a mid-cap one. The EPS of 9.37 translates into a price to earnings ratio of 30.53, which is largely in line with the industry PE of 28.86. The price to book ratio of 10.76 is, however, very high. The company has a debt to equity of 1.6197, whereas the return on equity for this stock is a very strong number and stands at 0.4056. The dividend yield for Starlite Technologies is 0.70%, whereas the promoter holding is just above average and stands at 53.86%. Now the fourth stock on the list is Aarti Industries Limited, which is available at rupees 1463.35, whereas the face value for it is 5. The target price here has been set at rupees 1740.00. The symbol for it is AARTIIND. Now Aarti Industries Limited is a manufacturer of specialty chemicals and pharmaceuticals. The company is also engaged in the manufacture of home and personal care products. It operates through three segments, which are specialty chemicals, pharmaceuticals, and home and personal care chemicals. Now Aarti Industries Limited recently received two multi-year deals. A rupees 4,000 crore contract with a global agrochemical company for a term of 10 years and rupees 10,000 crore contract for a term of 20 years. The order book provides AIL with a long-term and sustained revenue visibility. This will help the company to generate higher margins and improve its return on capital employed. With the company consistently investing in R&D and due to the increased API demand on account of the recent revival in the domestic pharma industry, Axis Securities expects AIL to further increase its share in the pharma segment. Now, as is evident from the one-year chart, even though there have been moments when the stock has swung wildly, the stock has been on a beautiful uptrend. The market cap of the company is 11,897.04 crores, which means that the company is a mid-cap one. The EPS of 47.61 translates into a price to earnings ratio of 30.74, which is largely in line with the industry PE of 26.01. The price to book ratio of 7.85 is, however, on the higher side. The dividend yield here is 0.07%, whereas the promoter holding is just above average at 53%. Now the next stock on the list is Take Solutions Limited, which is available at rupees 145.20 and the face value for it is 1. The target price here has been set at rupees 178. The symbol for it is TAKE. Incorporated in 2000, Take Solutions Limited is a technology service provider with distinct expertise across life sciences and select niches in supply chain management. TSL offers services ranging from clinical trials, bioavailability and bioequivalence studies, regulatory submissions, and post-marketing safety monitoring, backed by IP-based technology expertise. Headquartered in Chennai, TSL serves 9 out of top 10 pharma companies. It is represented by 1,500 plus professionals across 16 offices in 7 countries. Large addressable market, drug sales lost due to patent expiration, domain expertise of TSL, high entry barriers and focus on expansion to boost revenues, premium margins enabled by IP-based technology are the reasons why Axis Securities thinks Take Solutions would be an outperformer going forward. Now looking at the one-year chart, the company had a major spike towards the middle of the year, but it could not sustain the same. The company is a borderline stock between a small cap and a mid cap with a market capitalization of 2,148.00 crores. The EPS of 3.77 translates into a price to earnings ratio of 38.51, which is much more expensive when compared with industry PE of 22.40. The price to book ratio of 2.79 is, however, not wildly expensive. The company has a debt to equity of 0.2680, whereas the return on equity for this stock is 0.1585. The dividend yield is 1.10, whereas the promoter holding is a strong number and stands at 66.80%. Now the next stock on the list is Marico Limited, which is available at Rs 378.85 and the face value for it is 1. The target price here has been set at Rs 428. The symbol for it is MARICO. Now Marico Limited is a consumer products company operating in the beauty and wellness space. The company's principal products include edible oils and value-added hair oils. The company's geographic segments include India and international, which includes primarily the Middle East, the Southeast Asian Association for Regional Cooperation, which is SAARC countries, Egypt, Myanmar, Malaysia, South Africa and Vietnam. Now, as is evident from the one-year chart, barring a huge dip which happened recently, the company has primarily been on an uptrend throughout the entire year. The company has a market capitalization of 48,904.40 crores, which means that the company is a large cap one. The EPS of 6.20 translates into a price to earnings ratio of 61.10, which appears optically expensive. However, when compared with the industry PE of 70.96, this still appears cheap. The price to book ratio of 16.08, however, is very high. The company's debt to equity is 0.1137, whereas the return on equity for this company is a very strong number and stands at 0.3010. The dividend yield is 1.12%, whereas the promoter holding of this company is above average and stands at 59.71%. Now the final stock on the list is Amber Enterprises Limited, which is available at Rs 918.40 and the face value for it is 10. The target price here has been set at Rs 1106. $1.00. The symbol for it is AMBER. Now, Amber Enterprises is an India-based original equipment manufacturer. The company offers products including air conditioners, microwave ovens, refrigerators, washing machines, heat exchangers, multi-flow condensers, luminaries, plastic extrusion sheets, vacuum forming components, injection molding components, sheet metal stamping, and auto parts. Now, Amber Enterprises Limited is the market leader in the room air conditioner industry in India with market share of around 55% in terms of volumes, and its clients account for around 75% share in the Indian room air conditioner market. Current penetration of RAC in India is around 4.5%, while the global average is around 30%, implying ample room for growth. Increasing demand of outsourcing by brand owners to improve their returns provides growth opportunities for AEL, and also government thrust on local manufacturing and measures such as increase in custom duty augurs well for ODMs like Amber. Now, looking at the 1-year chart, the company has been an underperformer throughout the entire year. The market cap stands at 2,888.05 crores, which means that the company is a mid-cap one. The EPS of 19.42 translates into a price to earnings ratio of 47.29, which is much more higher when compared with the industry PE of 16.14. The price to book ratio of 3.27 is however not wildly expensive. The company has a debt to equity of 0.1085, whereas it does not pay out any dividends. The promoter holding is also below average at 44.02%. Now friends, we'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.